Hi, welcome back. Today we are going to discuss about Reserve Bank of India Act 1934, that is RBI Act 1934. Reserve Bank of India (RBI), established under Reserve Bank of India Act 1934, is a central bank which regulates all the banking functions in the country. Inter alia, the main function is to guide and regulate the other banking institutions in the country. It is responsible for issuing currency, implementing monetary policies, and supervises the overall financial system of the country. In other words, it is also known as the banker's bank, as it provides advice and assistance to the other banks apart from managing the financial system of the country. The overview of the Act is, it has 5 chapters, that is Chapter 1, 2, Chapter 3, Chapter 3 capital A, Chapter 3 capital B, Chapter 3 capital C, Chapter 3 capital D, Chapter 3 capital E, Chapter 3 capital F, Chapter 4 and Chapter 5 along with 2 schedules. So Chapter 1 deals with preliminary, that is Section 1 and 2. Chapter 2 is discussed from Section 3 to Section 19, and it discusses about incorporation, capital, management and business. Now Chapter 3, that is Section 20 to 45, discuss about central banking function. Now we have Chapter 3 capital A to Chapter 3 capital F. So Chapter 3 capital A, that is Section 45 capital A to Section 45 capital G, and that discuss about collection and furnishing of credit information. Then Chapter 3 capital B, that is from Section 45 capital H to Section 45 capital QB, and that discuss about provisions relating to non-banking institutions receiving deposits and financial institutions. Now Chapter 3 capital C, that is from Section 45 capital R to Section 45 capital T, and that discuss about prohibition of acceptance of deposits by unincorporated bodies. Now Chapter 3 capital D, that is from Section 45 capital U to Section 45 capital X, and that discuss about regulation of transactions in derivatives, money market instruments and securities, etc. Now Chapter 3 capital E and Chapter 3 capital F, that is discussed in Section 45 capital Y to Section 45 capital Z, and deals with joint mechanism as well as monetary policy. Chapter 3 capital E deals with joint mechanism, and Chapter 3 capital F deals with monetary policy. Now Chapter 4 is from Section 46 to Section 58A capital A, that is with general provisions. Chapter 5 is Section 58 capital B to Section 61 and deals with penalties. Along with these chapters, it has 2 schedules. Now the salient features of Reserve Bank of India Act 1934. Main objects of the Act, that is the Reserve Bank of India Act 1934 was enacted to constitute the Reserve Bank of India with main objectives to A. Regulate the issue of banknotes, B. Keep reserves to ensure stability in the monetary system. Now C. To operate effectively the nation's currency and credit system. So the 3 objectives of the enactment of RBI Act was A. Regulate the issue of banknotes, B. Keep reserves to ensure stability in the monetary system, and C. To operate effectively the nation's currency and credit system. The RBI Act covers the Constitution, powers, and the functions of RBI. The Act does not directly deal with the regulations of banking system except for a few sections like Section 42, which relates to the maintenance of cash reserve ratio or CRR by banks, and Section 18, which deals with the direct discount of bills of exchange and promissory note as part of rediscounting facilities to regulate the credit to the banking system. The RBI Act deals with A. Incorporation, capital, management and business of the RBI. B. The functions of the RBI, such as issue of banknotes, monetary control, banker to the central and state government, and banks, lender of last resort, and other functions. C. The general provisions in respect of reserve fund, credit funds, audited accounts, and D. the issuing directives and imposing penalties for violation of the provisions of the Act. So, RBI Act has four main functions or deals with four main functions. A. Incorporation, capital management and business of the RBI. B. The functions of the RBI such as issue of banknotes, monetary control, banker to the central and state governments and banks, lender of the last resort and other functions. C. The general provisions in respect of reserve funds, credit funds, audit and accounts. And the final one, the issuing directives and imposing penalties for violation of the provisions of the Act. Now the role of RBI. RBI has various roles. The first one is role as a central bank of the country. The Reserve Bank as a central bank of the country started operation as a private shareholders bank. RBI started issuing the currency notes and acted as a banker to the government. In order to have close integration between the policies of Reserve Bank of India and those of the government, the RBI was nationalized in 1949. Thereafter, RBI started functioning as a state-owned and state-controlled central bank. To streamline the functions of the commercial banks, the Government of India enacted the Banking Regulation Act of 1949. RBI Act as a regulator of banks, banker to the government and bankers bank. It controls financial system in the country through various measures. So, to streamline the functioning of the commercial banks, the Government of India enacted Banking Regulations Act in 1949 and RBI was nationalized in 1949. It started its operation as a private shareholders bank and was nationalized in 1949, and in 1949 Banking Regulations Act was also enacted. So this is with respect to the role as a central bank of the country. Now the second role is role as a bank. So the second role is role as banker to government. In terms of section 20 and 21, the RBI has the obligation to transact the banking business of the central government. Among others, the transaction include acceptance of money for account of the government, making payments on its behalf up to the amount outstanding in the credit of the government, carrying out government's exchange, remittance and other banking operations including management of the public debt, giving of useful advice to the central and state governments on matters related to economic and monetary policy. So these are the main four functions that the RBI performs as a banker to the government. The first one is acceptance of money for accounts of the government. Second, making payments on its behalf up to the amount outstanding in the credit of the government. Third, carrying out the government's exchange, remittance and other banking operations including management of public debt. And the fourth one, giving of useful advice to central and state governments on matters related to economic and monetary policy. RBI has entrusted the work of payment and receipts on behalf of the government to its agents like State Bank of India and its associate banks. RBI has delegated the responsibility to some of the other commercial banks for doing government transactions as agents of RBI. Now, towards the third role of RBI, that is role as issuer of notes. The Reserve Bank has a monopoly for printing the currency notes and has the sole right to issue currency notes of various denomination except 1 rupee note. 1 rupee note are issued by the Ministry of Finance. The Reserve Bank has adopted the minimum reserve system for issuing or printing the currency note. Once again, the Reserve Bank has adopted the minimum reserve system for issuing or printing the currency note. Now, the fourth role of RBI is the role as a banker's bank. The Reserve Bank performs the same functions for other commercial banks as other banks perform for their customers. RBI lent money to all commercial banks in the country. Now, the fifth role is the role as controller of credit. The RBI undertakes the responsibility of controlling credit created by commercial banks. RBI uses quantitative and qualitative techniques to control and regulate the credit flow. Now towards the sixth role, that is custodian of foreign reserves. The purpose of keeping the foreign exchange rates stable, the Reserve Bank buys and sells foreign currencies and also protect the country's foreign exchange funds. Now towards the seventh role, that is role as a controller of foreign exchange. RBI has got the power under Foreign Exchange Management Act, that is FEMA, Foreign Exchange Management Act 1999, that is FEMA, to prohibit, restrict and regulate the following. Now, the first one, export, import or holding of currency or currency notes. Second, transfer or issue of any security or foreign security through official channels in India owned by a person outside India. The third, giving guarantee or surety in respect of any debt, obligation or other liability incurred by person resident in India to a person outside India and vice versa. Now the fourth, any borrowing or lending in foreign exchange. Fifth, transfer or issue of any foreign security between a person resident in India and a person resident outside India. Now sixth, any borrowing, deposit or lending in Indian currency or between Indian national and foreign national. Now the seventh one, transfer or acquisition of immovable property outside India other than a lease by an Indian citizen or a foreign national inside India. So the basic function of FEMA is to prohibit, restrict and regulate these 7 factors or transactions. The Reserve Bank issues license to certain scheduled commercial banks and other entities to deal in foreign exchange known as authorized dealers or ADs for dealing in foreign exchange. Under Section 17 of RBI Act, Section 17 of RBI Act, the scheduled banks are eligible to rediscount eligible bills, loans and advances against eligible securities from the RBI. Section 18, Subclause 1, Subclause 3. Section 18, Subclause 1, Subclause 3 provides for short-term loans against any other securities which the RBI may consider as sufficient. So these are the 7 distinct roles that RBI plays. In addition to this, it also has some other roles. So the other roles of RBI, the Reserve Bank performs number of other developmental works. These works include the function of collecting and publishing the economic data, clearing house, buying and selling of valuable commodities, buying and selling of government securities and giving loans to government, etc. So the role of RBI can be considered as 7 distinct roles as well as 1 role that include all other roles. So with respect to that, we also consider various banks under Reserve Bank of India. So the banks under Reserve Bank of India can be broadly classified into 3. That is cooperative banks, commercial banks or scheduled, that can be scheduled and non-scheduled banks, and then developmental banks. So developmental banks is the SIDBI, NABARD, NHB, Exim Bank. And cooperative banks, we have short-term credit institutions and long-term credit institutions. With respect to commercial banks, which has scheduled as well as non-scheduled banks, there is public sector banks, foreign banks, old or new private banks, local area banks and regional rural banks. So that is a various type of banks that is under RBI. So that is with the end of this session. Thank you for listening. Thank you for your support. Like, comment and subscribe. Don't forget to click that bell icon so that you get an update when I upload my next video or a podcast. Thank you. Have a nice day.